Good morning and welcome back to the Opportunistic Trader for October 11th, a Thursday non-expiration day. Yesterday was, I'm not going to say it because Mike said not to say it's big. It was medium. We had a medium move that people blew themselves up in. Interestingly enough, since I woke up this morning, the S&P has rallied $25 off the lows. And we're saved again for the moment. I do think today we're going to have two back-to-back big down days. If they go positive, it's a great short. I'm happy that they're opening here rather than in the hole. Something just came out. We just rallied 10 handles in 5 seconds.
CPI just came out and it was only up 0.1. They were expecting 0.2. So the fear of the Fed having to go crazy is probably abated for about 5 minutes.
Yeah. So the S&P is exploding positive on the day. I don't know why that is so impactful to the market, but again, we just try to trade and stay alive. The market is a short here at 81 for a trade. Now it's 82, 83, 84.
I think the idea of if somebody was looking at yesterday's sell-off attributed to Jay Powell and the Fed, and the Fed having to move, the lower CPI print of 0.1 is certainly not endorsing that they're going to have to increase rates at a higher pace than anything that was expected.
And how come bonds are on the low of the day? Explain that one to me there. Okay, bonds are
22.
I understand the low of the day is 4 ticks from here. They were up 1.5 points last night. They're now up 23 ticks. The low of the day is 23 on the bonds. They're trading at 30. They didn't rally off the number. They sold off. So I get it, but I don't get it. So the bond can't hold a rally. The Fed is not changing their mind because of CPI being 0.3 or 0.1. Markets, this is a better opening for a sale. If the market fails here, which it should, we're going to trade the lows of the day, and through the lows, this correction isn't a one-day wonder, but we'll see. But getting back to yesterday's action. We tried to buy the market twice. We got hit. And you know what? We're actually, I'd like to sell. So would you put an order in at 83 to sell E-mini S&P? I'd like to sell E-minis. Actually, move it to 82. We'll put it in at 82. We're trading at 80. Hopefully we bop up there to get short. I don't understand why the market rallied so much. Literally I woke up this morning at 4:30 a.m. and the market was bidless. So, this is better action. This is a better opening to short. We're barely down now. The Dow's down like 70 points. It was down 400 when I woke up. So somehow they turned everything, but I do think there's pain out there in the system. The selling was real yesterday. We saw a very high volume, 40% above normal. This is a better opening than if we opened down 25 handles if you wanted to play the short side. But you have to see how everything, parses out today. The market now is bid for whatever reason. I think we're about to get filled at 82. For the first trade of the day, we'll put a 95 stop in against that. We're filled. We're filled. Live on the air, we're filled. So we're short at 82. Markets are weird. The S&P has rallied $35 since we opened this morning. And where's the volatility? Did it come in a lot?
VIX is 214, the highest.
Yeah, VIX never really went up that much, even when we were making the lows in there. It's an interesting tape. There's no liquidity in the S&P. I watch it. We were trading 80, and then we traded up to 83 without an offer. Now we're trading 81. We should trade down here. Hang on one sec. My board. The markets are, the markets are very volatile. This is a much better opening to sell. If you wanted to get short, I'm not exactly sure what was going on last night. I mean, we discussed it before we came on the air, Mike. You had a market in China down over 10% last night, and what'd you say, 1,500 stocks were shut down for the day?
Yeah, so about over 1,000 is what they said, that they have a 10% max limit and that they had to shut down over 1,000 names. We had actually much larger selling in Asia. Kospi was down over 5%. Shanghai was down, I think, just over 5%. Nikkei down 4%. So there was larger selling in Asia. So, it's got to be more than just a rate story right now, because these equity markets have been in a downtrend for a long time now. It's just the U.S. market yesterday catching up, and so they're extending on that move. But it's those markets have been in a downtrend for months now.
Yeah, I mean, and those markets in themselves have, yesterday being down 5 and 3 is on top of being down 20% for the year, and we're still up on the year. It's the same mantra. I don't understand our markets. And, going to the president, calling the Federal Reserve insane. I mean, what do you use the word, loco? Loco. That's fine, right? But it's funny because when we were selling off this morning, that was every headline. The president this, the president that. Then we rally and go positive, and now everyone's like, this morning on CNBC, they have everybody on, basically freaking out. They had this guy, Gene Munster, who was always bullish, and he's not that bullish. He's scared, thinks there's more to come. People are out there very negatively. So it'll be interesting to see, in general, how this market shakes itself out. It's funny. There's no seller in the market right now. There was a seller all morning. Now there's no seller. I can't understand why the president is...
Some tweets out right now. President Trump says, tariffs on China are having a big impact. My policies have hurt China, and I've a lot more to do.
Oh, wonderful.
That's
and we're rallying on that, dude. That's awesome. I guess the market didn't pick up the tweet because the market is just bull central. It's
actually from a Fox interview, but, that's the rhetoric.
I don't know. I mean, it's funny because all markets around this didn't really come back. So oil dumped about $1.50 yesterday. It's still down $1, or actually it dumped $2 yesterday. Nothing came back other than the E-mini S&P right here. So this should be a good opening to short for trade, and we'll see what happens. There are better markets to buy. I would be a buyer of the DAX before I would buy the US. The DAX is down, another % today? Down, what's it down on the year? 10, 11? And it's crushed.
I was just pulling that up, actually, year to date right now. So there are Chinese markets that are down between 20 and 30%. I have 4 different indices there. Hang Seng down 15.5%. Kospi down 14%. But let's get into Europe. The DAX right now is down 9.87%, and that's with that we've rallied at least 1% from the overnight lows.
And the S&P is still up 4, by the way, guys.
FTSE's down 8. Taiwan down 8. Most the CAC is down 4. A lot of major markets are red. The only ones that are green really are the U.S. markets. And Nasdaq is now up 7.5. This is the cash, so 7.5 in the Nasdaq. And we were down over 1% overnight, so that would have been 1% more. And the S&P is up 4.19%. So, there's
this opening is a short. At these levels, I don't know if we trade the lows, but if we get down to the lows of the day, we could really have a violent down move. I don't know if it's going to happen. They have the plunge protection team around, but everybody is under hedged. It's still that way. We talked about it. The puts for tomorrow's expiration, what was it, 2,600 puts or 20?
I was looking before. The 2,650 puts were, I think, 550 bid. And, that's 100. When I was looking at it, it was 120 points away.
I think the 2,600 puts last night on the close were $5 bid. I just think, people don't have the hedge. If we open here unchanged or higher, I mean, it's not a good opening. I would not think that it's a good opening to be buying. Again, it's just my opinion. I just would not buy in here. I'm actually sold a little, and I'm going to sell more on stop, $10 lower, because I think we could, if we go down 10, 12 from here, which we were there 5 minutes ago, we could take the lows of the day out. So, it's funny, yesterday, the trick was you couldn't see any stocks down pre-opening, and then the market just came in for sale. Today, the stocks are actually down a bit, and the futures are kind of flat. I know they have a discount in them of about $75, but 75 Dow points is like nothing. So we'll see if the market can hold. We don't expect it to hold in here for the opening. It would have been better if we had a flush whoosh on the opening, and maybe then you could look to buy them. But right now, unchanged on the day, they're, after being down 30 points all night, and NASDAQ basically flat after being down. I think the NASDAQ was down over 100. Yeah, it was down 105 last night.
Yep.
And now we're green. So, I don't love this opening. I'd like to see it lower. Maybe we get a little lower before the opening. We have an hour to go. We can move $25 in an hour, but the market just doesn't feel right. Yesterday's selling, I heard from some big hedge fund guys out there. It was real selling. It was coming from real vanilla guys getting out. And I think you're going to see more of that today. And I think people, it's funny. We talked before we got on the air, and yes, on a percentage basis, yesterday isn't like a crash. It's not a, whatever. But the bottom line is $40 in Google is $40 in Google for the traders, whether Google is 1,000 or 200. Okay, it's still on a percentage basis, it's different, but the way people trade, it's still a $40 move. If Goldman Sachs moves $7 in a day, it's still a humongous move. It doesn't matter if Goldman Sachs is $400 or $150. People are trading for the dollar movement. So, yesterday was a lot bigger in general than it looked. It's weird action out there. The market just came in $5. It should be $10 lower than this, actually. I don't know, who's buying it. But they're going to pay the piper on the opening, I expect. Let's bid 72 to cover these futures. So we'll put a 72 bid in. See if we can take $10 out of these. They're trading 75 right now. Coming in. So, if you're with me, we're basically a couple of bucks away from, getting out of these things and making $10. Let's hope. But again, I think the market trends a lot lower than this. I think you're going to see massive selling again today from institutions that have to lighten up the load. And, we were quoted yesterday in the Washington Post. They did a feature on the market because it was like the first down day in a very long time. And we were quoted in there, and basically they were asking me about the high-flying tech sector. And what's funny is Apple up or down? Apple's up 30%. Is that a crash? Apple crashed, but it's up 30%. How is that humanly possible? Okay, let's go to the better one. Let's go to Netflix. Okay, is Netflix up or down, Mike? It's up.
Nicely.
It's up 80%. If you got an 80% return, you'd be pretty happy. So that's up 80. Okay, let's go to Amazon. Okay, it's only the second highest priced stock in the country. And you know what it's up on the year? 50%. So, these stocks, Google's flat on the year, and Facebook is actually down about $23. So it's down close to 10%. So there's divergences there, but the big high-flying techs are up so much that I'm not sure. I'm just not sure how it plays out. Is this really a correction one day? So yes, it was violent, and yes, it moved big, but looking at it overall in general, it just doesn't feel that big. I think there's more to come. The opening, now we're going back up, is kind of flat, down $4. I know we're at a discount. Here come the spoos back up. The bottom line is, this is not a big move yet. There is more correction. We probably will trade negative on the year within the next 2 weeks or week and a half. If we do that, then you're going to see just a cascade of selling. People have been in this stuff for years and years and years, and we think it's gonna get it'll get a little whippy. So, that's our thought. Let's look at some put prices down low. So, you know what? Hang on one second. I'll have to go to this screen. That screen blew up. The puts got crushed here. The put prices have come in significantly. I think there's a good chance we take the low out today. In the S&P E-mini, which is 27.48. Yeah, the overnight low, like 27.48, whatever. What was the low? Yeah, 27.47 and a quarter. It's funny, we're $30 from there, and people are buying them. Where were they last night? They didn't want them. Now they want them. I don't think the market holds here, but we'll have to see, how things trade, during the day. The better opening to buy is much lower than this. The nothing down opening. Opening down 5 handles after going down 100 yesterday. You would think you would see some selling in here. The stocks don't look that good. Like yesterday we were talking about it, and the stocks actually weren't showing it. The stocks are worse than the S&P. I mean, obviously a lot of that has to do with the premium in the futures, but overall, it doesn't look so good. We're getting close here on our buy to cover. Let's hope they hit them, which, they're jiggling back and forth up. They saved them again. So we're...
Goes to show you, I think there's going to be a lot of 20-point moves today, everybody.
Yeah, it could be. I am thinking if we open around like this, the first 20 is coming down, and then we're going to see if we can get another 20 down. Doesn't look good. People are very, you're seeing a little bit of it's what we talked about. Nobody had the hedge. That's why volatility was up 45% yesterday in a market that was down only 3%. So people are still looking for hedges. They want to still buy the market at every level. I don't know why. That's something, to be discussed at a later date. But I mean, listen, generally from my experience, seeing a market like yesterday, this is going to be followed up by some heavy selling. You just have to wait and see. If we get into the 60 handle, we could skip to the 50 handle pretty quickly. I think they're trying to hold it up for the opening. Stocks do look lower. But like you said before, the amazing part of the market, and this because we watch it every day, is these other foreign markets are just, how can an economy or a world hold up down 25, 30? If our market is down on the year, this place is going to blow. There's going to be an incinerated smoke pile of broken traders all over the place. And you got the DAX down 10, the Nikkei, which was up, is now down probably close to 5 to 10, and it was down 5 last night. And we're just holding up. Our markets are bid. They're holding up and they're bid. So it's going to be interesting to see. Here we go, buyers all over again. So the market just came up again. There's it's ridiculous. The bottom line is, there's speculation.
Index is down 16% year to date coming into the day.
Yeah, and we're up. Oh, spoos.
Who's back on?
Back on 74.80, 74.80. It's like watching, it's literally watching my kid.
Looking at your screen right now, what's on the bid and offer and what's typically on the bid and offer on the S&P?
There's 20 lots, but nothing's real. The machine front runs every order. So basically when they see a buy order, they run in front and they buy in front of the order. I mean, listen, I don't want to get into that because that's for a whole nother conversation. Everybody is well aware of the front running, but they don't do anything about it.
But typically high frequency guys make all of their money when there's no volatility or when we're in a 5-point range in the S&P and there's very limited volatility. What actually happens when we have these volatility pops like this is that they take the computers off, and that's what I'm saying. Right now, there's on the screen that shows that there's 20 by 20 in the bid offer.
I understand,
spread.
But that's not what we're discussing. We're discussing the fact that if they can see my order before it goes in. As soon as they see me click buy, they run and buy. So what happens is in a tape that's a 14 or a 10 or an 8 volatility, that buy will be met with the minimum tick increment. But right now, we were just 76, we're 78, literally in one tick, 79. 78, 78 and a half, 79.
Well, no, that's what I'm saying, though. And there you go. We just dropped 4 boxes because there's no liquidity. Typically, there's 200 or 300 in every box.
No, the market's trading up. It's just recentering.
Right.
But that's the point. The point is the high frequency guy, which I wouldn't call high frequency, I'd call it front runner, is it knows when the buy orders are coming. So it sees it and it runs in front and buys in front. So that being said, the market itself is being manipulated by buy orders. Like if I put a buy order right now, it would run the market $3 because I would never be able to buy it, and everyone would run in front of me and buy it. That's the nature of the beast. Market's back to 80. We missed them by a tick, which is annoying. Now we're gonna probably take heat on this for a little bit. They love them again. It's honestly, it's just front running. That's all it is. And you're right. The fact is that, when you say the algorithm, like it's not an algorithm, it's a front runner. If there are 10 buy orders, listen, we saw that in the marijuana stocks. It was this Tilray. They ran the stock $100 because all you had to do is click buy in your machine and 50 buy orders came in and there's no seller. Same thing here. If the market comes in for sale right now, it goes down $5. If it goes to buy, it could go up $5 just because there's no liquidity. And your point is that, the algos have a harder time. Like we just dropped $5. It's just one buy order came in and they're all running in front to buy, and then they set them up. But it's become difficult. Now we're back to 80. The thing's moving $5 off of one order. So it'll be interesting to see. I hope we open up. It's definitely a great short for a trade. The markets, they can go a little higher, but overall, I mean, we were down 100 handles yesterday. That's 3%. I mean, we've rallied half of what we were down yesterday off the opening already. I mean, we were down in a panic last night, 40 handles. And the NASDAQ was down 100 and change. So
it goes along also with what you were saying onto the close yesterday of trying to avoid that overnight market because there's a lot of random noise out there.
Well, no, there's great trading though. I mean, the bottom line is we're not able to really cover it 24/7 in the chats at this point, although we're covering the world and have people in London and Australia and whatnot. But overall, it's hard to guide at night. I mean, you could set a position, but I mean, I don't know. I just think there's better buys in the market. I'd be a buyer of oil, which has dropped more in a percentage basis than the stock market. Oil's dropped 5% in the last 2 days. So that might be a better thing to look at. But overall, I like this opening on the short side because, the market has come up 30 handles off the low in a panic. there's really not a lot of reason for it. You're going to see margin selling by 10 o'clock. People are really wounded out there. I've spoken to a number of hedge fund people, and it was not a good day in hedge fund land yesterday. There were pure liquidations. There's going to be much more stock for sale coming. It's just a matter of when. And the thing is, if we get down to those lows today, it's going to pop volatility maybe to 25 to 30, and people don't have the hedges still. So, yeah, they've mellowed it out right now, and the market's kind of flat. So we'll see how the opening goes. I don't know if Vince is joining us. He was not with us yesterday. Figures the biggest day of the year or since February, and Vince is on the beach. I think he's like in Tahiti or something. I don't know. He's taken his gold and gone to Tahiti. So hopefully he'll join us either later or tomorrow.
Yeah, he's around. He's actually typing in the chat room, but he can't be on with us audio right now. But he was on for that gold report, and he's been looking for volatility to move higher. But I know in gold he was looking for a short, and I think that CPI move, gold continued higher. So we're actually up $19 in gold right now. A combination, I think, of a number of different things. But ultimately, it's really yesterday was a typical position unwind sort of day where we had crude, which was been in a big uptrend. Equity markets, U.S. equity markets, have been in a big uptrend, reversing lower. But a lot of the currency pairs, and then so the dollar is actually weaker here because once again the market was positioned long dollars. So euro got down to 114.20. Now we're back up to 115.80. The pound's moving up on a combination of good Brexit news and also that. But also the interesting one is like Aussie's up 60 pips here. Typically that's one that goes down. Aussie yen is one that would typically correlate with a risk-off move. But the market's been so short Aussie because it's been in such a downtrend with the Chinese markets that it's actually reversing as people take that position off. Dollar yen's really flat. It was down initially in Asia, but it has popped back, but really no change there. And dollar CAD above 130. But a lot of EM, dollar Turkey right now is at 6. Typically, if it was a big risk-off environment, it would be, dollar emerging markets higher.
Yeah, but it's the head fake, Mike. All they're doing is when, you would think X would happen if Y happens, and it doesn't happen because the algos are all polluting all of these trades that make a lot of sense, and then they will go. It's just you got to stay longer, and you got to hope that you capture the move, but it's a painful, frustrating thing because you're sitting there going, this doesn't really make sense to me. I'm looking at a lot of different things, and it just doesn't make sense. And you keep saying that, and you keep looking at it, and the bottom line is it doesn't happen. It's almost like what I call the reverse jam. It's like what should happen doesn't happen. Now, if it was me, you, and a bunch of traders, it would happen. But it's an algorithmic computer, and they're like, listen, we're going to keep this thing going this way, no matter what, and there's nothing anybody could do about it. But we'll have to see, if the market trades down and takes the low out, maybe those traditional trends will come back into play. I don't know. I'm not sure. Again, I want to talk about something that's, really, something we're looking at that's like eating at me is this VIX versus the VIX future. Okay, so now the VIX future that goes out next week is 1995, and the VIX is 2172. And the funny thing about it is, even when the thing was 2450, the market on this VIX never traded above 21. So there's like literally a 15 to 20% discount to the futures price versus the cash, and I don't understand what that is. And we've seen it traded a premium for the last basically year. And we picked this up a couple of days ago. Remember, we picked it up a week and a half ago. It was the other way. The VIX was like 11.5, 12, and this volatility was 15. So it was reversed $3. Now the markets come in, and they don't want to buy the volatility or the volatility futures. Now, the VIX is a very deceiving product because it's just basically nothing that you can trade. You trade derivatives off it, but you can't actually like trade the cash VIX. You could trade the volatility futures or options and esoteric products around it, but you can't trade the VIX. So the fact that it's 2173 means nothing because it's really 1995. So that's the VIX that we're looking at, is 1995 on the VIX. It's basically flat on the day with the VIX cash down 5% at this point in time. So the VIX cash is down 5.27%, and the VIX future is actually up 1%. So, that's a big divergence. If we have another leg down, you're going to see an explosion in volatility. So that's the play for the day. The play for the morning is to be a little bit short, praying or trading for the market to come in. We're actually always praying, but we're hoping that the market comes in, and we're expecting a pop again in volatility. It's down almost 6% on the day. I think the first leg here is lower. I really think we're gonna trade down. We're gonna play for that, and that's really that's what I see. I don't know if you have any thoughts, Mike, otherwise on any other things.
Just kind of looking, observing, talking to a lot of other traders, hearing how they've been positioned, what they're hearing from the street, things of that nature. And, it kind of comes back to how they've been positioned, because a lot of people, these moves in the global markets, it's really been, if you have the FANG stocks on, you've done well, you've outperformed. If you don't have those stocks on, you are in the red for the year. And, with the midterm elections coming up, and it's a pretty interesting dynamic, because how that might turn out, the fear that people might trade on coming into that. So a combination of all that stuff is playing into the markets right now.
It's just shocking that the S&P is flat after everything. After last night, after how low we got. I didn't think they would bring them back, but it's honestly, if you think about it, the market is so crazy. And so, listen, the funny thing is, okay, I'm not going to use names, but people I know that have long equity exposure, when they're selling?
Never.
You got it. Never. So if the S&P went down 20% from here, they wouldn't sell. They wouldn't sell if the S&P, actually, they'd probably be, the only time they're selling is if they're forced to sell. They're all over leveraged. They don't look at their positions. We know people that are RIAs that don't even have the screen up. They don't even have a screen up.
Our neighbors.
Yeah.
They're not subscribers, so we can talk about it.
They actually are. They're in. They're, you got to turn the screen on and help your clients. And at some point, you got to sell. You can't think this thing, you've gotten an extra 5 years out of this, but that's it. That's all I see. I'll be on multiple times today. I do think it'll get hairy if we go back to the low. They're trying to open the market positive. I think it's a mistake. I think there will be some heavy selling in here, but we'll have to wait and see what happens. Vol is getting smashed, actually, as we speak. It's now down 6%.
What do you think of that market on close move? Because we were trading about 28.20 with about 25 minutes to go, and then there flashed a large imbalance that moved us down to about 2,800. Then it kind of came back, the imbalance. Talk to me about the imbalance at the end of the day.
The imbalance is fake, and literally I feel like calling the New York Stock Exchange today and actually discussing it with them, because it's, the imbalances are put out to smooth volatility, and really it just increases volatility, increases uncertainty, and it's not real. You could change your imbalance till 3:45. So if you put $1 billion to buy at 2 o'clock, you're not held. You could change that at any point. So what's the point of putting it out? So, a call will be made to the New York Stock Exchange today about it. I think it's really adding a lot to the volatility. They need to shut that down. It's irrelevant what the imbalance is. The imbalance, I was a specialist on the floor. The imbalance was originally set up there to help us facilitate if we had too many to buy or too many to sell, get people involved. But you want to know what? Now it's used as a fake out. So yesterday it was 200 million to buy up until 344, and 344 someone walked in with 2.8 billion for sale, which couldn't even be real. And then by the end of the day, it paired off to like 400,000. So it was funny because when the imbalance popped up, we smashed down, and then we traded up 20 handles, and then we got killed. Again, I think people are getting hurt here, and I think it's going to be really good trading, and I hope that we stay in here for the next 25 minutes, because if we do, the market should sell off. And I want to get to work here, so I'm signing off. I'll be in the chat, and I'll be back right after the opening.